Hello everybody and welcome to our Before the Bell in 3D session. My name is Jose Blasco, week 40, October 2nd, 2023, and let me remove the introduction slide so I can say hello from here, from the right side of the screen. How are you everyone? A pleasure to be joining you as every Monday as we begin the week and we get organized looking at key markets, to be specific, 5 key markets, probably the most relevant markets in the world. Equities, metals, energies, currencies, cryptocurrencies, etc., and that way, we could understand the market environment and we can be focused when it comes to position ourselves. No matter if you trade long term, mid term, short term, whatever you do, hopefully this session is helpful to help you get organized and be focused. Okay. In any case, we're gonna get started here. Before we begin as well, I need to highlight in the bottom part of the screen our financial disclaimer. Please, I'm counting on you, everyone, to read it completely. It's important stuff, of course. So it's gonna be there for the session, and again, counting on you to read it. So, as we begin, okay, so we're going to be going over 5 key markets, as I said. Those 5 markets are also found on our newsletter, which is the one we publish on our LinkedIn company page. Even if you're not a user of LinkedIn, you can certainly go there, subscribe, is free, and then you receive it on the email inbox. So if you don't like to use LinkedIn, you can still receive it on the email. We're just using LinkedIn as a distribution tool, if you wish. And again, the 5 markets that we're going to see, as I was mentioning, are going to be the S&P 500, crude oil, gold, the US dollar-backed Bitcoin, even though there is something important I need to mention about the backed Bitcoin today. Very important, actually, a very big change. Anyway, so let's begin with the first market. We're going to look at the S&P 500 futures. Of course, I'm not going to be looking at this using this particular page with static information. We're going to be looking at real-time charts. For that, I will utilize TradingView, as you can see here. And by the way, I didn't mention it, but for the ones of you who may want to get a copy of the newsletter, you want to subscribe, here is the link, here is the QR code for you to go there and just follow the steps and just have access to that newsletter in a weekly basis. So the S&P, right? So we're gonna look at the markets in 3D, right? As we always do, we look at those 3 dimensions. And in this example number 1, which is the S&P 500 futures on a daily time frame. So what I'm gonna do is I'm gonna take a little bit of time to explain each of the dimensions. We call it the climate, we call it the UFOs, and we call it the expected moves. So you will see better what I mean by that in a moment, and I will explain it. I'll take a little bit of time to explain it, and then I will fly through the rest of the markets because we will now be in a position where you understand the 3 dimensions, so we can go faster through the content. And this, of course, it's thinking of you guys if you are new to our session, so at least you can follow. And if you are a usual viewer of our sessions, so just bear with me in the beginning part of the session as I give a little bit of extra time to the S&P so I can explain those 3 dimensions. Anyway, so dimension number 1, we call it auto climate or the climate. And this is that thing in the bottom part of our chart, which sometimes is blue and sometimes is red, and sometimes it gives us, like today, thick dots, red color thick. Sometimes, as you can see on the left, we got thin color dots. Okay, they're red too, sometimes they're blue. Here you got a blue and thin. So sometimes it's thin, sometimes it's thick, sometimes it's blue, sometimes it's red. So what does that mean? Well, this has to do with the statistical stage in which the climate is. So when a dot is thick, it means the climate is confirmed. Red means to the downside, blue means to the upside. So right now we are in a down climate on the S&P, which is confirmed. If we look at the newsletter, you would see here a little cloud. So that means rainy, down climate for the S&P. Okay, that's what it means. So down climate for the S&P, which is confirmed. Sometimes we may have thin dots, and that would mean that there is a directional component on the price movement, but the climate is not confirmed, meaning that we don't have a real statistical advantage by either being a buyer or being a seller, long or short. There is not a clear statistical advantage based on the algo And therefore, if you trade like me, then you don't trade that market, you go trade another market or trade that market on a different time frame, because obviously different time frames, for example, if I change from daily time frame to, let's say, 1 hour charts, so different time frames will produce different climates for that time frame, which defines the type of trader you are. Very active if you use short-term trades, short-term time frames, very passive if you go for the higher time frames, okay, or anywhere in between. So we have a down climate which is confirmed. So it seems that being a seller, it's the right thing to do. But we are not done yet with the climate. We also have statistical information here related to the duration of the climate, what we call the count, where you can see with the down arrow here, the down climates are supposed to last by waves of 3 candles at a time. And this climate is definitely moving way beyond what statistics suggest, which is 3 red dots. We actually have 11 red dots, which is way past 3. And therefore, it means that there is real fear in the marketplace from a statistical point of view. That was definitely not a normal thing to expect. Okay, so we can see here in the newsletter as well how you have counts 11 out of 3. So you see the newsletter is giving you this information. That's why, in my mind, it's quite important or interesting that you receive that in your inbox. In case you cannot attend these sessions live, you can always go and review that information in your inbox. Okay, now, why is it that statistics were not followed here? Well, first of all, statistics are not a guarantee. They are just a reference, very smart reference that most often than not will be met, but not always. That's why it's statistics instead of guarantee. But second, the real reason why this statistic was not being met, it's because of the second dimension. So dimension number 1, climate, dimension number 2, UFOs, okay, which stands for on-field orders. Okay, in this case, we have a UFO, a flying saucer here, green color UFO, that is buy on-field orders. So we have buy orders located at 41.75. The current price is 42.98. Actually, the current price is a little higher than that. And we also have sell on field orders higher at 44.62. So in other words, there is no situation where we have, let's say, a green UFO very close to price, and because that's the case, the moment price comes to the green UFO, buy on fillers get filled and the S&P goes higher. We don't have that green UFO. Therefore, there is room for the S&P to keep falling, and because there is room for the S&P to keep falling, because there is nothing to stop it from falling, there are no buy orders, at least for now, until we reach 41.75.5. So then the climate, which is not a normal thing to happen, the climate keeps propagating to the downside because there are no buy orders to stop it. Okay, so that's what we have, and that's why the climate keeps propagating, and we may end up seeing the S&P go all the way to 41.75, unless, and the UFOs is real time, maybe you look at the chart tomorrow and you see new buy orders here that were not here today, or even higher, but those are not here today, and therefore we cannot guess they will be there until we get the evidence. Okay, so the evidence is we have a down climate, even though statistically speaking it's exhausted. We may get to see the market fall all the way to 41.75. I will not bet on that because the climate is statistically exhausted, but it could happen because there is nothing to stop it. Or the climate may change direction because it's exhausted, and then we will see green UFOs come in, and then a new climate, blue color climate, will develop, and then it will be a potentially great opportunity to trade to the upside. But in the case of the S&P, as you can see, again, at least if you trade like me, the right choice for me would be not to trade this time frame, because it's too late to the party. 11 is more than 3, and there are no buy orders or sell orders close by. So anything could happen, really. This market is in the middle of nowhere. It's right in the middle, half distance between where the red is and where the green is. We're halfway in between. So yeah, no real opportunity here with the S&P today. Now, speed of movement is expected to be 48 points a day, 105 points a week, 219 points a month. And this is extracted from options prices. We reverse engineer options pricing models by looking at the real price of the options, which we can see real time. And then we reverse engineer pricing models and we come up with, okay, so this is what it's built in the price of the options. price options are trading at such prices, meaning that statistically they represent, in a one standard deviation of the cases, they represent moves of that size: 48 points a day, 105 points a week, 219 points a month in 68% of the cases, which is one standard deviation. That is the meaning of those values. Anyway, so now you know, when it comes to the S&P, what's the climate, which tells you what is the likely direction, what are the UFOs, where are the unfilled orders, which tells you where is the next likely turning point. When it hits the sell, it comes down. So this is the next turning point. When it hits the buy, it comes up. This is the next turning point. So the unfilled orders tell you that. And then you have the expected moves, which basically tells you if the trade is worth it or not. If the expected move is very little, then it's going to be a boring trade. Go trade something else. If the expected move is nice enough, then get ready to trade, right? Because the risk and the reward is likely going to be powerful. Anyway, so we now know about the 3 dimensions. So now I'm going to change market to crude oil, and I am going to fly. So crude oil, what do we have? We have a crazy climate, blue and thick, confirmed climate to the upside. A normal thing to happen is 7. We are currently running candle number 24, where a normal thing to happen is 7. So crude oil is behaving just as crazy as the dollar index, as you will see in a moment, which, by the way, because the dollar index is doing what it's doing, that's why crude oil is doing that as well. It's very relevant to understand the dollar index, of course. And again, this is a crazy situation. We almost never see this, but it's truly happening. So definitely a situation where you can see price come to where the unfilled orders are, unfilled orders kick in, and it keeps going. But this turning point, to be honest, is unlikely, because you were already in a position of the climate where you are late to the party, statistically speaking. But again, what's happening on crude oil is the mirror image of what we saw in the S&P, which is there is nothing to stop it until we get to 100.84, which is where the next set of unfilled orders are. So 88 for the buy, 100 plus for the sell. So summary: sunny climate, 24 out of 7. That makes it statistically unsustainable, but we got nothing to stop it until 100, so it may sustain. And the buy orders are located down at 88.15. Expected moves: 1.85 points a day, 4.07 points a week, 847 points a month. Those are the expected moves when looking at options on crude oil futures. Next market in line, gold. By the way, I am using technology to do all these analysis, the speed of the light. Okay, look at that. I click gold, 1, 2, 3. Here are the UFOs. That's it. No time wasted. Artificial intelligence. That's it. Let's go for it, right? So this is a smart and convenient way on how to do your market analysis and your planning for the trades. It takes no time and it's powerful. And if you are interested in knowing more about those tools or subscribing to it, know as well that we have courses on our website. You get 3 months of access to the tools with the courses. You can go ahead and do a little bit of research on our website and find a lot of very useful information. And if you have questions, feel free to email me. Happy to help. Anyway, so what do we have when it comes to gold? We have a down climate, which is confirmed. A normal thing to happen is 5. We've been falling for 7 candles. Again, same story. The dollar index is impacting big time. The dollar is going up. Dollar is becoming stronger, so you need less dollars to buy gold, and gold, therefore, is going down. Now, of course, when we get to 1828, that's a different story, because you got buy orders for gold, and if that's the case, you got room all the way. Beautiful trade, potentially speaking, of course. Never a guarantee, but you could see gold do something like that, go all the way from 1828 to 1986. That is a pretty nice trade, isn't it? So we'll see. Okay, we will see. But anyway, summary of conditions. We are dealing with a rainy climate, 7 out of 5. Sell orders, 1986.7. Buy orders, 1828.7. And expected moves, 15 points a day, 33 points a week, 69 points a month. This is what is expected for gold. Next market in line is the dollar index. I was just talking about it. Such an important market, probably the most important market of all. 80% of markets worldwide trade in US dollars. That's not a joke. You can see again, same story. Price came into the green UFO, bounced from the UFO. Again, this is happening where you would not expect it, to be honest. because the climate is super crazily exhausted, statistically speaking. 22 out of 6. So it's blue and thick, it's confirmed, right? But definitely 22 is way more than 6. That is not expected. That is not normal, statistically speaking, but it's happening. Okay, so, and which is the reason why we see many markets behaving irrationally. And the reason why they behave like that is because that's the dollar. The dollar is doing that, and many markets follow. So, summary: sunny climate, pretty crazy, 22 out of 5. No sell orders at this moment in time in that time frame. So you may keep going. Buy orders located at 105.46. And expected move 0.49 points a day, 1.07 points a week, 2.23 points per month. That would be the expected move. Now, the next market that we have to analyze, we will not analyze it today, you will see why, is the backed Bitcoin. But look at what happens if I click on the backed Bitcoin chart. It says invalid symbol. And unfortunately, while you have it on the newsletter, you have all the data because we collect all this information earlier on the day, Asian times, which is when the market begins. Notice how the chart looked like at the time when we had the screenshot ready for the newsletter, but notice how it looks like now real time. So what happened? Is this a bug? No, it's not a bug. The ICE exchange, which is where this market trades, both in ICE Singapore exchange as well as ICE US exchange. So the Bitcoin futures contract used until today, backed as a reference for the Bitcoin index. And today they are switching to using Coinbase as a reference, as an index reference for the futures contract. And therefore, it will take a little bit of time for trading platforms and market data to catch up with that. And I would expect that in no time we will get this same symbol, the very same symbols to work, and we will get again Bitcoin data on the screen. But at this moment in time, right now, as we speak, real time, I cannot show it to you because this is real world market situations of what's happening. So no Bitcoin for us today. And we are then going to conclude our session by looking at the economic calendar. And when it comes to the economic calendar, really what I have to say is that it's a pretty normal week overall. But of course, next Friday, being the first Friday of the month, it's going to be unemployment number in the US. And that's normally something powerful. From a volatility point of view, from an opportunity point of view. So, of course, there are other aspects which are important during the week. So, for example, monetary policy statement in New Zealand, may change the interest rate, so may have an impact on the currency, may have an impact on commodities. Again, there are always interesting things happening out there. But if I was to give this week a title, it would be Unemployment Week, which is probably the most relevant event of the week. My friends, a pleasure having spent some time with you planning for the week ahead. Our book always puts a smile on my face when I see this picture. We are proud of it. Our book has been designated number 1 new release in 3 categories in Amazon. It's a powerful book. It's 200 plus pages. You can have it in paperback or ebook, whatever you choose. And when you buy it, you have all the materials there to really take your trading to the next level, or even start trading if you never traded before. But also, apart from the book, you can see here in red color, there is a course included with the book. So you follow the instructions in the book on page 6, I believe. And then you would just come to our website and basically unlock access to the course. And with the course, unlock access to the UFOs and the autoclimate. And basically, you have the book, you have the course, you have the tools. So you have everything to get ready and become a serious trader with the tools that serious traders will use. Okay. Anyway, with all of this said, we are done for today. As always, super pleasure. Have a great trading week ahead. See you soon. If you are around later at 10:30 a.m. in New York, 10:30 p.m. in Asia, if you are in Singapore or China, for example, or other countries, Malaysia. So please join me. We are doing our open meeting like what we do twice a month on 2 of the Mondays during the month. So it's today. So if you feel like joining me, join me. This is for everyone, not only for our clients. This is for everyone. That's why we call it open meetings. Come to our site, follow the instructions, and you'll be able to come to the open meeting tonight. And we'll talk about trading. See you, everybody. Take care. See you soon. Bye-bye.